Futures trading involves substantial risk of loss and may not be suitable for all investors. Now the cattle market. That's what everybody's been asking about. Just a complete meltdown in today's trade, and a lot of that came on the back of headlines and a statement from President Trump kind of indicating that the administration is going to continue to do more to lower beef prices. And we've been talking about this for over the last week. We had an interview with Ag Day TV on Friday when we had that limit down day, and we talked about the administration steps. What is the step going to be, and will it be enough to really lower beef prices? That is really irrelevant. I think the fact of the matter is that this administration is going to keep moving forward. They're not going to drop it and stop after step one. They want lower beef prices. They are going to continue to bombard this market with headlines, and that's the headline risk that's been looming over the market, and we saw it again in today's trade. Feeder cattle, limit down. That does give us expanded limits for tomorrow's trade in live cattle and feeder cattle. So for live cattle, 1075, feeder cattle 1375. We talked about it in this morning's livestock roundup that we put out. If you're a producer and you've been able to capitalize on this nice bull market, that is great, but you have the administration outwardly talking about wanting lower beef prices. If that is not enough to spur action to get protection, there will never be anything to spur action to get downside protection. Is it too late? I don't think so. I think these headlines are going to continue to come down the road until we get what the administration wants, which is ultimately lower beef prices. So does that mean we're going to go straight down and fall out of bed? No, not necessarily, but I do think the upside is limited here. And from a risk management perspective, trying to tell clients why you're long the market, aggressively long the market, where the administration is essentially on the other side, that's a tall order. So again, a little bit of chart damage, breaking back below these old highs in the December live cattle market. And for feeder cattle, January futures, back towards that 20-day moving average. Below that is the 50-day. That comes in at 353. When you see these ranges expand, you get some a little bit more of an emotional trade going on. So expect the volatility and the back and forth to pick up, I think, in the coming sessions as market participants and traders continue to digest these headlines and the prospects for additional headlines down the pipeline.